Toronto home prices have likely bottomed according to experts, and it's probably going to go up in price for the rest of the year. I'm going to give you my thoughts about what I think about this article. And the second article we'll be covering is Bank of Canada not seeing alarm bells in housing right now, despite all the mortgage pain. Interesting. Very, very interesting. I'm breaking it all down for you guys in this week's episode of the reaction video on Prime Properties TV. And if you are looking for some help on how to navigate this market in the spring market, whether you're buying, selling, or investing, you can book a call with me using the link that's on the screen right here. It's www.chatwithzen.com. Simply click on the date and a time that works best for you. And then when you see the prompt, fill in your name, email, mobile phone number, and a question you have for me. And then we'll chat then. Good day, Toronto. Welcome to another episode of Prime Properties TV. My name is Zhen, and I run and operate a RE/MAX in the Greater Toronto area, on top of making awesome educational content just like this one for you. And if you're enjoying some of the content I'm putting out there to educate you on what's happening in the real estate market on your real estate journey, make sure you help me spread the knowledge by smashing that like button and subscribing to the Prime Properties channel so that you can help get the knowledge out there. Now, the first article we'll be covering is Toronto home prices have likely bottomed, expert says, and will increase for the rest of the year. Do I agree? Yes, but it always comes down to the nuances of how they're measuring what the prices go up. So in this case, I think they're talking about seasonally adjusted prices, because very likely, unless we're going after a little massive bull run, like I said in the last few videos about this is very seasonal, we're probably going to see some kind of price drop after June, just to go into summer months. And again, it picks back up in the fall, and then it comes back down in the winter time. So I highly doubt that the prices in December are going to be the same as what they are right now. They're likely lower. But if we adjust it seasonally, is it going to be trending upwards? Yes, I would say so. Right. So one of the things I've highlighted that's actually very interesting that they point out in this article is that affordability hasn't changed at all, right? Meaning that even if rates stay the same the way they are right now, which a lot of people are saying it's going to happen, and I tend to agree, rates will stay this way for a little bit, and maybe they'll revert back to their average, like mortgage rates, like 3%. Prices are now going up, meaning that the affordability has gone worse. So that means your monthly payment every single month has gone worse. So likely the bottom may have been in if you talk from that perspective, right? Now, there's a person who here clearly owns a real estate firm saying that there's no where but for prices to go up. Prices are trending month over month up, and inventory is trending month over down. Look, I agree with them, and that's what the market watch that I talked about last week has said. But it's not that there's nowhere to go up. There are obviously chances and weird things that may make prices go down, but the likelihood of prices going up right now are very high. Do keep in mind, I own a brokerage. This person owns a brokerage. There's a little bit of bias, right? But what a lot of people keep talking about how affordability is unreal is that they keep coming back to the fact that they take the average price, saying that you need a household income of $277,000 with 20% down on a stress test to afford it. Look, this is by definition, yes, it's unaffordable, but when you are actually in the market trading each day and talking to people who are buying and selling, you know that's actually not the case. This is where you can see that people who are just theoretically talking about something, trying to apply that it's unaffordable and it doesn't logically make sense to the market. Where in reality, what's happening, most people who are buying the average home, which is around like 1.1 million, which is call it a 3-bedroom semi in Toronto or a town, they're selling their condo, they're buying that home, and they're still keeping the mortgage around $400,000 or $500,000, even at the higher rates. And a lot of people are extending this so that they're actually scathing some of the stress tests because they have a portion of their existing mortgage that's already at a lower rate from when they fixed it in a few years ago. So there's a lot of those buyers out there right now that aren't as rate sensitive to this like 80 loan to value that everyone keeps talking about. And even if that is the case, a lot of the people who are buying do have incomes over $277,000, right? Because if you take a household, divide by 2, that's about $120,000 a person, which yes, is a lot of money, but anyone who's over like 25 that has gone to first or second promotion in their career is easily making that. So that's 2 accountants, 2 engineers. There's tons of people like that are able to buy at this 80 loan to value. The real question is, do they have the down payment, right? So when you kind of take the theorized, logical approach and apply it to the market, yes, it isn't affordable. But when you look at how people are moving up the real estate ladder, then yeah, it's actually very much still affordable. So another comment we have here is from Ben Rabidou, who I would say is pretty balanced, but steering more towards the bear side. He's also agreeing that the market is very, very tight. There's just no supply right now because nobody is selling. And based on the current market balances, prices will accelerate strongly over the next few months, and he doesn't see it reaching the peak being March 2022. And I tend to agree with them. Like, I think prices are going to accelerate, but nowhere near to the point where we're back in March 2022, at least for this year. Maybe in a few years. Yeah, absolutely. But at the moment right now, because no one has to sell, because the banks have been backstopped and basically off-seed, the banking regulator have said, yeah, that's cool. We can do 40-year amortization. Nobody needs to sell. Even their mortgage payments have gone up, right? And that's only like one bank. I've talked a lot in the last like 6 months, the Scotiabank, right? So Davir, this is the person from Oxford Economics. The housing correction is not over. Again, nothing against, I'm sure he's a very, very smart economist, right? Like, I'm sure he's very smart at what he does, right? But it's always the same thing. Oxford Economics, and I forgot who always says that Toronto's in a bubble, Toronto's in a bubble. We already had our crash, and now things are picking back up. And when you're from a far away, not looking at how some of the transactional side on the day-to-day basis are going, yeah, you can definitely apply that. But this is where a lot of people can get shocked backwards, because yes, a lot of people have said Toronto's overpriced, Toronto's going to crash, and they've been saying that since 2008, right, from what I remember. And yeah, there were a couple of points where it dropped down, but overall the trajectory has been up, right? So it really just comes down to, like what you want to believe, the person who's theoretically looking at something, which has total logical sense, by the way, I agree. But then you have the people like me and the other person who is trading every day, and we're seeing the people who are buying and selling, and these rates and this affordability is that they're talking about isn't applying to those people, and they're still transacting, because real estate still has to move whenever you have death, divorce, and debt, or when you just need more space, and it just has to happen, right? Now, one of the things that I find hilarious about this person is that he also still says, despite maybe prices coming down, Toronto will remain outside the affordable range, which I totally agree. And I've said this countless times before. Affordability is dependent on your income. Affordable is different for someone who's at minimum wage versus a person who is trying to basically buy a home that is a professional income, and they're trying to get into like a ground-based home. So affordability has a different definition for every single person. And that's why I don't like it when, politicians say, hey, we're trying to make things affordable, because it's such a like vast net that you catch everybody. And really it's just like talking, a lot of hot air, right? Now, the last thing I highlighted here is that Rabideau says a 10% price decline is unlikely, and a large surge in supply will need for that price de-acceleration to happen, right? And I 100% agree with that, because I've always said this: in the short term, inventory dictates price. In the medium term, it's your rates, right? And long term, it's population, right? So generally, that's kind of what I've been saying. But when you are in the short term, call it 3 to 6 months, when inventory is so low, you can't see prices come down with so much demand. You would need to see a lot more inventory build up, right? This is why we always use the months of inventory. And months of inventory right now is at 1.5. We need to go back up to like 3, maybe 5 for prices to come back down. And they were at 3 like in January, and prices were still flat. They came down when inventory was still at like 3 because of the shock. But we haven't seen prices actually come down until we hit about 5 months of inventory. So for us to actually start seeing prices come down, we need to see 5x the amount of inventory that come on the market right now. And I just don't see that happening right now. Or you can just tell everyone who needs a home right now to not buy. It's one or the other, right? And neither one is looking like the case. That's why short term, very unlikely prices will come down 10%. But if you want to say in 3 to 5 years where inflation spikes, again, hypothetical, inflation spikes, we see rates go up again to 10%, and then the market crashes some more. Yeah, sure. If you want to believe that, go for it, right? I can't predict that. But in the short term, I can very clearly see that 30, 60 days, we're not getting enough inventory right now. Now, he's saying there's no way you have another 10% down if you take snapshot. Oh yeah, that's basically just what I said right now. So yeah. All right, so the next article we got here. Bank of Canada not seeing alarm bells in housing market despite mortgage pay. So Tiff came out and they addressed, and he's saying that, Bank of Canada is not concerned about the impact of rapidly rising mortgage rates on the overall health of the country's housing market. And right now, even though he's saying that a lot of markets are stabilizing, including GTA right now, where prices are actually taking back up, seasonally speaking, right? And the last thing he actually commented about this is that, but if you look at the household sector overall, we're not seeing alarm bells. Look, I agree with him, and we're not seeing alarm bells in the housing market right now because the banking regulators have come out and basically backstopped the mortgages for anyone who has seen the interest rate hikes, right? So if you are in every single bank outside of Scotia or First National, if you are on a variable, your monthly payment did not increase. let's just hypothetically say 5 major banks, only Scotia has it. That means only 20% of the people who bought with a variable are actually feeling the pain of the higher interest rates. Everybody else, the payment has been exactly the same. They've just been backstopped because they're allowed to amortize past 30 years now, and that's in the banking regulator's latest release that they're trying to pass. And they're allowing people to have their amortization, meaning their mortgage amount that they owe, grow. So for those reasons, nobody needs to sell. So that's why there's no alarm bells set right now. And then when you start seeing the market pick up, there's more demand right now and no one is selling because of those reasons that I just indicated. Yeah, the housing market has no alarm bells right now to set. Now, when all these things renew and they come up in like, say, 3 more years now, so like 2025, 2026, depending on where the market is, there could be alarm bells right now. But like he's saying, and I think he's saying politically correctly, there are no alarm bells right now. Can we see like 3 to 5 years some issues like, a lot of people are talking about? Yeah, maybe. But if the demand continues piling at this rate and we still let so much immigration in, I can see that we're not building enough homes. This is why I think long-term real estate prices are going to go up for that reason, because the Canadian government has basically backstopped it, prevented from actually having a free fall in price discovery downwards, because that is basically our economy, right? That's unfortunately the game we're playing right now. Fair or not fair, logical or not logical, the actions that they're taking right now have basically shown us that that's what they're about, backstopping the Canadian housing market. Anyways, hopefully this gives you an idea of what's happening right now, and a lot of experts, including myself, on what the kind of thought process and where the market is heading right now. If you are looking for some help on how to navigate this real estate market in the spring, whether buying, selling, or investing, you can book a call with me using the link that's right here. It's www.chatwithzen.com. Now that I'm done watching this video, I think you should check out this video. And you know what? Why don't you check out this video too?